Let me show you the price of oil, because this is signaling something bad, arguably, to a lot of people. That global growth, because of all these issues we've been talking about, is not there anymore. Producers, they're worried about oil prices falling. Right now, we are down 1%, $45.41 a barrel. This is actually the lowest since the third quarter of last year. In October, we had prices high. We're down 40% from October. So the issues are sustained oversupply, along with some other issues really impacting the price of crude oil. We're going to bring in our next guest here. His name is Rob Thummel. He is the portfolio manager for Tortoise, which has $21 billion in assets under management. And Rob, thanks for joining us. Are low oil prices a good thing or a bad thing, in your opinion?
Yeah, no, thanks for having me, Lauren. So, yeah, low oil prices are actually a good thing for the economy, right? It stimulates growth going forward, right? So gasoline prices are low. That's more money in the consumer pocket. So we have to be. We don't want oil prices to go too low, though. That can be dangerous, because then there's not enough capital investment for future oil in the future to be produced. And so oil prices are getting to that level where they're dangerously too low. And so we think that oil price will go up from here, and that will be supported by lower oil inventories.
Where's the bottom, then?
Well, we think we're pretty close to it, right? Because what happened is we had too much oil come to the market too fast, and so oil inventories increased. So now, starting in 2019, you're going to start to see oil inventories decline, and when that happens, you'll start to see oil prices rise again, and we'll go back to, we think, $55 to $65 here in the U.S. And that's a real sweet spot for the consumer as well as the U.S. producer.
So the oil companies then are making enough money from the price of a barrel of oil where they can continue to invest and find new sources of oil to get it to market?
When it's 55 to 65, when it's below 50, that's when U.S. oil producers start to cut back. They cut their production back. They cut their capital back. And that's when they don't spend enough money to produce more oil in the future. And that's when we could see a price spike well into the future, because the investment's not being made today.
Well, the good news is that gas prices are about the cheapest for this time of year in about 2 years. So that's a tax cut for so many consumers. But are you able to see that as a good thing, or are you more worried about the global demand drying up story?
No, we see it here at Tortoise. We see that as a good thing. Actually, there used to be, we actually think it's kind of a misperception. So historically, yes, low oil prices sometimes signal that, you know what, maybe there was a pending recession. We don't think that's the case anymore. We're not really concerned about demand. Really, the problem and why oil prices are so low is because we just have too much supply. So low prices actually boost a lot of companies like refiners. Energy infrastructure companies are a great way to be investing in these type of environments where you can get high current yields. And so we actually think the energy sector is a great place to be looking at if you're an investor, and then obviously you're benefiting if you're a consumer as well.
Yeah, well, you can certainly buy oil on the cheap right now. Rob Thummel, thank you. Have a good weekend, sir. We appreciate you.